can we confirm if we can hear me? If you can, so that I can just confirm my sound. All right, thank you very much. Thank you very much for that. At least now I'm sure that we're together. So good morning once again, and we're all welcome to this webinar. Sorry, can we hear me? Can anyone hear me, please? Please just confirm that you can hear me.
Yes,
My
we can hear
network.
you, Joy. Yes, we can.
Oh, all right. Sorry, my network is acting up.
Oh, great.
So, yeah. So we're welcome to this section. It's been a very busy week. I want to ask, has been our weekend so far? So I'm assuring you that even taking out your time to be here this morning, it promises to be a very packed section. It's going to be impactful, and it's not going to be a waste of your time at all. So before we begin, I just want to ask us a quick question. How confident are you in your current understanding of the new tax rules? You can respond with the chat box. You can just respond with the chat box. How confident are you in your understanding of the new tax rules? You can just respond in the chat box. So I'll just proceed while I get your answers. So my name is Joy Adejumo, and I am the lead communications lead for Lefort. And I want to welcome you all once again to today's section. Like I said earlier, it's not going to be a waste of your time at all. It's going to be impactful. It promises to be packed. So many of us already, ouch. Okay, many of us already know it has become very easy for businesses to fall prey to misinformation, especially with the new tax laws that have recently been signed in Nigeria. There's so much happening on social media. There's so much broadcast messages being spread on WhatsApp. You see so many reshares. And then this causes a lot of confusion. There's a lot of confusion out there. And social media has even made it harder for business owners to know what is true and what is not. So, which is why we decided to organize this webinar to help businesses get clear, accurate, and practical information on what the new tax laws are all about. So this the kind that helps you to structure your business operations properly and also to minimize your tax liabilities legally. Take note of the highlights legally. So you minimize learning how to minimize your tax liabilities legally. So before we proceed, I would like to inform us that this webinar was put together by Lefort. So at Lefort, we are a tax finance business advisory firm that helps businesses operate with global standards. Over the years, we've helped businesses save over 400 million in taxes through proper planning, compliances, and strategic advisory. So our mission is very simple: to prepare businesses for global dominance, make sure that African businesses grow, they scale, and then they become global brands. That is our mission. And then today we have the perfect person to lead this conversation. She is no other person than the CEO of Lefort, Ms. Toyin Olufo. She's a chartered accountant both in Nigeria and in the UK, and she's also a seasoned consultant with over 15 years of experience practicing, like I said, both in Nigeria and in the UK. And she is also a Mandela Washington Fellow, among other notable achievements. So she'll be taking us through today's section. I don't want to say too much so that we can enjoy our time on the call today. So let me just welcome. So let's welcome together our facilitator for today's section, Ms. Toyin Olufon. Ma, you're welcome. Please, let's put our hands together. Let's put our hands together. Let's
Hey.
put our
Thank you for the warm welcome, Joy. And
You're welcome.
before you take your, let me just be certain that I'm able to share my screen. And yeah, so yes, side by side. Good. Can you see my screen now?
Yes, we can. It's side by side. Yes, we can.
Fantastic. So let me presentation mode so that it comes up better. Yes, thank you. Good morning, everyone. I know that typically on Saturdays we want to use it to rest, but with the new tax law coming into effect 1st of January 2026, we thought that we should put this together to help a lot of businesses. Because as it is at the moment, there are a lot of ways, very simple ways that companies can become liable, because of ignorance. And we wanted to play our part by bridging the knowledge gap. And that's why we've put together this webinar. So once again, thank you for joining us this morning. And please, if you have at any point in time in my presentation, this webinar will not be more than 1 hour, 1.5 hours maximum. That's the plan. It's not be more than 1.5 hours maximum. But if you have any question, please make sure you use the Q&A box. Yes, the Q&A box that's the box that will help us to be able to track all the questions that are being asked. So another thing I want to assure every one of you is that every question asked, right, would be responded to. Even if we can't respond to the question, maybe because of time constraints during this webinar, be rest assured that we would definitely respond to the question via email after today's webinar. So please, I know some of you had already also sent in your questions when you were registering. We collated those questions as well, and to a large extent, that informed what we've put together as well, so that we speak directly to the needs, to your questions, to why you joined today's webinar. So once again, thank you everyone and welcome to today's webinar. Let's get into today's business. New tax rule, new realities, how they affect you and your business. That's very key. I think Joy gave a background already. Please, I'm coming. I need to minimize. I need to move something away from my screen so that it doesn't disturb me. I'm not disturbed. Great. Fantastic. I've done that. Right. So the question is, sorry, please. Okay. So just as Joy had said, there's a lot of panic, at least from social media, and that's because every other person there's a lot of misinformation online, and that's why, as I said, we thought to put this together. And if you follow me on my social media pages as well, I've tried as much as possible to be giving out dashing out informations there. Okay. Joy, please, you need to fix this. The chat is not enabled on everybody's side. Look at the chat and the Q&A box. Be certain that everyone can interact with that. So Joy, please pay attention to this and try and fix this. Thank you. So you've
Okay,
probably seen the tweets, the voice notes, the
I'm doing
posts
that
saying the
one.
government wants to tax everything, including your bank account. How many of you saw that, right? So you could just please react. Fantastic. Yes, you saw that. Okay. Yes. And I saw the panic, not just the panic, a lot of people were so scared, not the ones that were not scared, they were saying mean words. And I'm like, why? Why would the government do that? But outrightly, the government doesn't want to tax your bank account. That is certain. And it's important today, by being part of this webinar, you understand exactly what applies to you and what doesn't. It's not about the government taking your money. It's about reorganizing how tax is collected. And every category of person is affected differently. You only pay based on what applies to you. I think it's good we lay this foundation. Right. So who are the people that should pay attention to this new tax law? If you run a business name, if you have a limited liability company, also, I will say if you run a business named enterprise, partnership, and even an individual business that is not registered, you need to pay attention. Then, if you operate a limited liability company as well, you need to pay attention to those new laws. It affects you. Also, if you're a freelancer, a remote worker, or you're self-employed, it affects you. The crypto and digital traders as well, definitely this also affects you. Then do you make online? Yeah, are you a content creator, a coach, and influencer? Definitely this affects you. Do you receive foreign income but live in Nigeria? Maybe you earn, you consult or you provide, you export, whatever it is. This concerns you. Then also a non-resident earning from Nigeria, either an individual or a company, this laws also affects, you. So I believe that everyone that is on this call today, you definitely fall in one of these categories. Yes, you definitely fall in one of these categories. So, so what has changed? So we have the new Tax Act. It does three things. It has combined six old tax laws into one simple one. By the way, before this new law, for our clients, I know they will not be hearing me say this before, for the first time rather. It's something we always tell our clients. The laws have been obsolete in terms of the reality of businesses in this present era. The laws that Nigeria was operating with had been obsolete. In fact, it was not favorable to businesses in a lot of ways. For example, I remember back then, when you start a company for the first time, like you just commence a company, because of the commencement rule, most likely in the first year or first 2 years of running your business, you'll pay taxes. You pay double of the taxes that you pay double of the taxes of what it should originally be, in comparison with the new tax law. And that didn't make sense to me. So those laws felt as if they were punishing you for starting a business. And these are part of the anomalies that the new tax law has corrected. Then it also defines clearly who should pay tax and on what, changes how people and businesses should keep record, file returns, and prove compliance. As I said, the goal here is not for punishments, but if you are ignorant, it can come at an expensive price. Now, so good. So business name. I'm going to say some other form of business that also I'll categorize some of the form of businesses that also fall in this category. Um Joy, please, you stopped the recording in case you're not aware. Make sure this has been recorded because we'll send this across to people that registered that couldn't attend, even people that attended if they need to listen to it again, to really grasp all the. So please, can you hear me? I think I had a network glitch. Can you hear me? Just react. Thumbs up. Give me a thumbs up if you can hear me now. Fantastic. Thank you. Thank you. I can see that. Yes, you can hear me. Great. So if your business, because another thing I've observed on social media is that people do not understand the difference ways of the different forms of businesses. I mean, the way they've been registered in law and how that also determine the kind of tax that they pay. So I will start from there so that we lay this foundation and everybody you are able to follow through. Um, so if your business is registered as a business name or enterprise or a partnership, or you are just a self-employed and you're not even registered, but you do business. What I'm about to say now, you fall under this category. And this is the kind of tax that you pay. So what has changed? Business names, enterprise, partnerships, they are taxed under personal income tax, not company income tax, please. This is the first anomaly that I want to correct. So if your business is registered as a business name or enterprise, you are taxed under personal income tax and not company income tax. And that's because that form of business registration sees I mean your person, let's say Toyin, sees Toyin as still the Toyin and the business name as one. We are not separate entities. Unlike for a company, a limited liability company, the company it's in itself, it has a different identity from the shareholders, right? So please let's have this foundation. Let's lay this foundation. Now, ex you are expected personal income tax, but however, you're expected to file your returns annually on or before 31st March annually. This is one area that I know that a lot of persons or businesses have not paid attention to. You're expected to file on or before 31st March annually. So that means on or before 31st March 2026, you're expected to file your returns for year 2025. And when we say returns, what we're trying to, and what that means is that you have your financial statement prepared. Remember, tax also is paid, especially for people that are self-employed or you're into business, as I said, a business name or enterprise. You pay your taxes. This is another misconception that I want to correct. You pay your taxes on profits, not on the inflow in your bank account. I think I've seen that error too many times online as well. People are assuming that, oh, so because there's this inflow, I'll pay tax on everything. No, especially if you meet up with the deadline and it's not that it's the taxman that is chasing you. I mean, if you file as at when due, so there's something called self-assessment. You actually assess yourself. You would have said, this is my revenue that I made this year. These are the expenses that I incurred. And at the end of the year, I made these profits. So it is on that profits using the personal income tax rates, right, that your taxes will be calculated. Now, what is new? Tax authorities can estimate your income if you fail to file. So that is the new one now. If you fail to file as at 31st December, the taxman can choose to write to you and say that this is what we think you earned in that year, and this is what your tax should be, right? So, and that's just their way of ensuring to reduce tax evasion, basically. But yes, they now have the powers to do that. So it is best that you actually carry out the self-assessment and don't wait for the taxman to reach out to you. Then also, you may qualify for presumptive tax if you have no record. That is another one. Assuming they reach out to you, they can see that you're doing business with your accounts, and you're like, oh, I don't have any record. That means you'll be at their mercy to determine what your profits will be. And from experience, those scenarios never favors the taxpayer. So it's always best that, you actually, you take the charge, in leading how your tax liability will be determined. That's very important. So, so what should you do now? You have to register for tax, as I said, business name if you've not. And the body for personal income tax, it is administered by the inland state revenue service. At least they've changed the name now. Is the state revenue service. That means the states that you are resident in. They are the ones that have the powers to they are the ones that have the powers, to administer tax over your business and not FIRS. Please don't mix it up. FIRS too, FIRS is becoming NIRS. Let me begin to use the new terminologies. Right. So so it's important also that you keep basic record, even if it is on WhatsApp. When you go and buy anything or you're paying for anything, always request for invoices. Take a picture of it. You can store it up on WhatsApp. It's the same way that we send picture. I'm sure you have a group whereby you people post a lot of pictures, so you can create something like that for all your for all the evidences as well. You put it there. Notion, Excel, they can help you. You must file your returns yearly as well. Then review your business structure to see the one that's most beneficial to you. That's very important. Then stay ahead of compliance. Don't wait for letters from the state revenue service. So for individuals, most of the time you have remote workers, you have freelancers. They are the ones um they are the ones in charge of sorry, you are not registered per se. So this is how it affects you. For remote workers, income from Nigeria or abroad is taxable. need to register for tax and you're still registering with the state revenue service where you are resident in, please, you must file also annual returns. Then no more hiding under the label, I am not a business owner. That label would not save you again. You need to pay your tax. So now for remote workers also, I will just say this here. I will say this at this point, and I will not give all the details. But I'll say that for remote workers, you're wondering, oh, how can I minimize my tax? We actually have a strategy that can help you minimize your tax. But if you need more information regarding that, you need to reach out to us because it can't be all out there. It's a strategy and we cannot put it all out there. So except you are in need of it, please reach out and we'll let you know how to go about it. And it's legal. I'm not talking about anything illegal now. I'm not telling you that you need to falsify any invoice. No, that's not what this conversation is about. But reach out to us. So we also have business names. I think I've spoken about that. For business name owners, enterprise, you are still taxed, and annual tax return is also compulsory. Then there's new penalties that apply for failure to file. When we get that stage, I'll let you know. Then so for the limited companies, limited by guarantee, yes, you are if your company is registered in Nigeria, you are a resident company, your global income is taxable. No more income. It's not just only the income earned in Nigeria, but your global income now is now taxable. You must file annual company income tax return. Documentation is now more important than ever. Yes, because you see, it's this documentation that will save you from a lot of penalties and unfair tax liabilities that could accrue to your organization. So documentation is very key right now. Then there's stricter rules for deductible expenses. Then transfer pricing matters if you deal with related parties. That's very key. Then audits will be more digitalized and faster. So I think so for business for limited liability companies, what must you do? Keep proper record, register for VAT and file monthly, ensure withholding is deducted and remitted, review your pricing, contract and invoices, and prepare for e-audits and digital compliance. Now, at this point, I would like to say something. For business name or enterprise, I think I forgot to say it when I was on that particular topic. However, if your business is registered as a business name or enterprise and what you sell, the product or the service that you sell attracts VAT, like it is chargeable to VAT, you actually must register with FRS for VAT. Yes, you have to register with FRS for VAT and file your VAT return monthly as well. So the VAT return, or will I say the VAT payable is paid to FRS through the TRN that you have with FRS. And FRS has a digitalized platform that helps you to do that. Yeah, I just thought to include that. Then how does it affect non-resident companies? I think I'll not take time here. I will not take too much time here because I don't think we have any non-resident company let's say representative on this call. But by the time we send these slides to you, you'll actually see there. It actually affects non-resident companies as well. Now, so changes for oh God, please give me a second. Let me try and move. Yes, so what are the key changes for resident individuals? Some of them are actually not key changes because they've been existing before now. But how do you define that someone is resident in Nigeria? I think that is a point that everybody must pay attention to. As far the law says that at least 183 days in 12 months consecutively. So if you have a physical presence in Nigeria for at least 183 days in 12 months consecutively or intermittently, then that means you are resident in Nigeria. Yes. Then Nigeria is their permanent home base and business location. You are residents. The Nigerian diplomats or public servants in embassies abroad, they are termed to be residents in Nigeria. So we have key changes so what I've changed now, more progressive, higher income, increased taxed burden. And the truth is that this is how the tax system works around the world. The higher you earn, the higher your tax burden. So, but right now there is an exemption which is minimum wage or less, and those below the threshold of 800,000 per annum are tax exempt. So let's say that at the end of the day in your business, right? Remember, I said business name enterprise, you fall in that category. If by the time we calculate your revenue, you take out your cost, justifiable cost, so not just claiming cost, not arbitrary costs, but justifiable costs that you've claimed. And let's say that your profits is now less 760. This exemption also applies to you. That means you will not pay tax. However, if it is higher, you definitely have to pay tax. Then we have the consolidated relief allowance. It has been abolished. Before now, we had something called CFR, which is capped at 500,000 or 20% of your annual rent paid. So of um regardless of what your annual rent is, by the time we apply 20%, if it is higher than 500,000, you can only claim 500,000 as your CRA, basically. Then we have key changes, still continuation of the changes for resident individuals as well. So this is just a little explanation talking about how it affects, earners, like what you're earning. So now for those earning above 50 million naira per annum, your income tax is at 25%. Like that is the higher portion of your income taxed at 25%. Million and above, yours will be about 24%, thereabout. I'll show you a table now that will put everything into perspective. So this is the table. I hope everybody can see it. The old tax rate before, the first 300,000 of your income, that is for individuals, or profit for businesses, right? For the business name, for the enterprise. I intentionally want to be saying it that way so that those that own enterprises or business names, you know that this also applies to you. So the first 300,000 before now, it used to be charged at 7%. And however, the new tax rate says it has raised the band to 800,000. And that's why you can say it's 0% because it is exempt. So the old rates used to be, the next one would be 300,000, but in the new one, it's up to the next 2 million, 2.2 million is at 15%. Then the next 9 million is at 18%. The next 13 million is at 21%. Next 25 million is at 23%. Above 50 million is at 25%. Yes, that's the rate. And it will take effect from 1st of January 2026. So let's talk a little about chargeable gains tax for resident individuals as well. Before now, we used to have a flat rate, right? For 10% for capital gains tax. But however, now how how will an individual or a business or enterprise, qualify for capital gains tax? So when you make gains from the sale of assets, let's say land, shares, or property, you know that when we sell these things, we definitely make gains. So the new reform, capital gains tax is subject to the same progressive rate band as applicable to salaries and income. That band I just showed you now, that's what would determine the rate at which the gain you've made on that asset that you've sold would be charged to for tax purpose. And so if a taxpayer makes 60 million in salary and 10 million naira as capital gains, the gain is added to their income and tax using the same progressive scale, not the 10% flat rate again. Um, so so there is also increase in income threshold for the loss of office. So now before you when you lose an office, there used to be it used to be tax exempt for 10 million, but now they've increased that the limit has been increased to 50 million. Like if you get this severance pay or redundancy package increased to 50 million for which you will not pay tax. But the moment it is at 50 million, then you'll have to pay capital gains tax, at the progressive tax rate as well. Then presumption tax, I think I've said that before. They now have the right if tax calculation name with no proper record. Yes, the taxman has the power to determine what the tax you should pay should be at this point. And at that point, also, you will be at their mercy. It's important that you take documentation serious in your business. So we're now on companies. What are the key, the direct changes for resident companies? Resident companies is defined as you are incorporated in Nigeria. Its management and control exercised in Nigeria that is into the trade consideration. Nigeria has double treaty agreements.
Okay, so it appears our facilitator is having issues with her internet connection. I'll just check back and then circle back to us. So please, let's just hold on for a few moments, please.
Yes, I'm back, please. Can you hear me?
Yes, we can hear you now, ma'am.
Okay. All right. Great. Please, apologies. We're in Nigeria. And network, no matter how much, sometimes no matter how much you think you're prepared, um, Nigeria has a way of reminding you that you're not in control. So yes, because I'm using two different internet provider at the moment. Yes. So can you see my screen? So can you see my screen, please? Can I go ahead? Can you hear me? Can you see my screen? I need the thumbs up, please. I need you to react. And fantastic. Thank you. Thank you. That means you can see my screen, so I can go ahead then. Thank you very much. Um, oh, sorry, please. Okay. I think my screen stopped. All right. Please, can you see my screen? Am I still sharing? You can see my screen. Okay. Unfortunately, I can't see my own screen. So let me stop sharing and I would share again so that okay. So I'm told to use a single display All right, let's see. Okay, so yes. So are you seeing my slide now? Okay, fantastic. Okay, so for companies, I think I need to go back. And I really need to move fast as well because we don't have so much time. So I may not be able to explain a lot of things in-depthly. I'll be looking forward to your questions, and definitely we will share the slides with you so that you are able to glean more from what is being discussed today. Um, so for companies, yes, I think this was where I stopped. Yes, so taxed on this worldwide income. That's what it's been for companies now, not just the income you earn in Nigeria. Then increased exemption threshold for small companies. Small companies are now defined in the tax law as companies that have turnover that is less than 100 million per annum. So if you fall within that kind of company, you're exempted from company income tax, capital gains tax, development levy, and income exempt from withholding tax. So that means also your customers, oh, sorry, your buyers, your customers, yes, do not need to withhold from you, right? And you're defined as a small business. They don't need to withhold from you, and that's what the law says. But let me at this point also let me also say that because you're exempted doesn't mean that you would not file. You still have to file your returns at the end of every year, please. Don't forget to do that. If you don't file, then you will accumulate the penalties for not filing. It's important you take this into consideration. So yes, so annual gross turnover of 100 million, and if your total non-current assets is less than 250 million, that's the definition of a small company for tax purpose. Now, but however, this definition exclude professional service provider. So if your company is a professional service provider, like you're a legal firm, yeah, an accounting firm, yeah, an architectural firm, as far as you provide professional services, that's what you do. You are exempted from this threshold. And large companies, or let's say companies, the CIT is 30%. Then also the capital gains tax rate has changed from 10% to 30% as well. Rollover relief on capital gains tax for reinvestment in a replacement of asset is now abolished. So before now, if you sell an asset, you make a profit, but because you reinvest the sales proceed from the sale of that asset in acquiring another asset, you don't pay capital gains tax. However, starting from 1st January, yes, you'll have to pay capital gains tax now. Then also we have sale of shares in Nigerian companies, capital gains tax. There's also an exemption threshold which has been increased to 150 million in 12 consecutive months, and provided that the gain from selling that shares is not more than 10 million naira. The moment it is above 10 million naira, then you have to pay capital gains tax, Then tax on indirect transfer of shares. Sometimes we have companies, indirect transfer of shares in Nigeria companies, meaning that selling shares in offshore holding companies that control Nigeria companies. This will trigger capital gains tax. Um, so at the moment, there are certain structures like that whereby there's a holding company that it's a foreign entity, and they are the shareholders of a company in Nigeria. So if that holding company decides to sell their shares to another company, that you have to pay capital gains tax has to be paid on that kind of transactions. These are like the more technical part of um, the tax reform. Then we now have something called development levy. Development levy is replacing the educational tax before, the information technology levy, Lesani, police trust fund is replacing all these other taxes that companies used to pay. And now you just have something called development levy, and it is at 4% of your accessible profits. That's how it is calculated. Then we now have something called the minimum effective tax rates is now at 15%. So what does this rule apply to? Nigeria companies that are part of a multinational or Nigeria companies with annual revenue of 20 billion and above. There's something called the minimum effective tax rates. So a company, the law now stipulates that every company must calculate its effective tax rates. And if your effective tax rates fall below 15%, you have to pay a top-up tax to bring it to at least 15%. Yes. And this is how it's calculated as well. We have the cover tax profits, cover tax paid divided by profit. That will give you the effective tax rate, which you use to benchmark with the 15%. The moment it is lower, then you have to pay more tax to bring the rate to at least 15%. Then the impact on, so this actually impacts, it has a lot of significant impact on multinational groups as well. So if a Nigerian parent company has subsidiaries abroad, and they pay taxes that is below 15%, what the law now is saying is that Nigeria can charge the parent company in Nigeria the top-up tax to bring the effective tax rates to 15%. And the idea for doing this is to prevent multinationals from shifting profits to low-tax countries. And the truth is that most of them, they do that because it's a loophole that had existed in the tax law, and they've just been taking advantage of it as well. You read this in the slide. Don't let me get because these are like they are niche based, and if it affects it's only if you work with this kind of companies or you are you own this kind of companies that it affects to you, that this would apply to you. Then we have changes for non-resident companies as well. As I will just glance through this as well. When you get the slides, please, you can read more about it. But yes, there's something like that. Then we have something called the capital allowance. There are changes also to capital allowance, please. Capital allowance. So for tax purpose, depreciation is not an allowable deduction. But what is allowed is capital allowance. So there's been some changes to how capital allowance also are calculated on qualifying capital expenditure. Now we use the straight line basis for calculating capital allowance. And at the moment, and there's no more, before now, we used to have something called annual allowance, initial allowance, that has been abolished, and we just have, the straight line basis for calculating capital allowance now, which makes it easier and straightforward and transparent to both parties. I mean, both taxpayer and the taxman in terms of the accuracy of that calculation as well. Then, so there are by the way, there's something called free zone entities in Nigeria. They exist in Nigeria, but they are called the free zone entities. And basically, why it was created, those companies is that the government was trying to, what's the word? They were trying to encourage exports. So in those zones, it's just like you are in Nigeria, but you're not in Nigeria, basically. So there are different zones. You have the north, you have in the east, you have in the south. But however, free zone companies, they retain full tax exemptions on activities, export and output ultimately destined for export. So if that's the only thing you do, like you produce and why you're producing is for exports, you don't pay tax at all. But your business must be existing within that zone, basically. Then, however, proportionate taxes apply if more than 25% of sales are made to Nigerian customs territory. So that means that if you produce some of your goods and you end up selling some of them in Nigeria, then you have to pay taxes on that. But if all your products, your produce, the output is being exported, then you don't pay any tax. There's something also now called the Economic Development Incentive, and I think it's important that we all pay attention to this. The NCA, so the Economic Development Incentive is replacing what we call pioneer status. Before now, there is an incentive called pioneer status, which we grant a company a tax holiday for 3 years. Most of the time, maybe they're just starting a business in a particular area that qualifies for it, or they're starting a product line that is new and it qualifies for that incentive, but it gives you a tax holiday. Now, this has been replaced by EDI, called Economic Development Incentive. And what does that mean? It gives you, instead of giving you tax holiday, it actually gives you tax credits. Now, the tax credit is calculated, it's a percentage of your qualifying capital assets, right? Qualifying capital expenditure. So typically, most of the time, it's like the assets that you had to deploy in being able to carry out that business. Now, the best time for you to get that for you to benefit from this incentive is at the beginning when you are just about to commence the company. That's when you should apply, not when you've commenced operations. If you commence operation, then you don't qualify again. And I'm saying this so that people, you pay attention to this. And there are a lot of sectors that actually fall within, that qualify for this incentive. There are a lot of companies. If you are into the if you manufacture textiles, if you manufacture renewable energy equipment, you qualify. If you manufacture, if you are into agricultural business, also you qualify. My point is that if you want more details about this, you have to reach out to us because it is the list. In fact, it's about 13 pages basically, and there was no way we would have brought this into this webinar. However, we felt like it was important that we at least we make mention of it for people to know that it existed, or it exists rather, please pardon me, that it exists. What we observed with the pioneer status is that a lot of businesses did not even know that they qualified for it when it was existing back then, right? And it was important that we make more businesses aware that there are incentives, especially if you are into manufacturing, production. There are a lot of incentives, and it's important that you know if your business qualifies for it. If your business qualifies for it, please make sure you take advantage of this as well. So are you allowed to carry, you can, this tax credit, you are allowed to carry it forward for 5 years if it's unused, and up to 10 years as well. Yes, you can be given that extension up to 10 years. So what this tax credit does is that at the end of the year, it helps to reduce your tax liability that you have to pay, right? So anything that will make you pay lesser tax, please pay attention to it. So also, one of the new things that we have in the tax law now is the input VAT recovery, right? At the moment, input VAT relates to, okay, so I think let me start from here. We have output VAT and input VAT. Output VAT is the VAT that your customers pay to you, that you include in your invoice. Input VAT is the VAT that you pay to your vendor in procuring the goods and services that you needed to produce either the product or the services that you sell to your customer. So that's the difference between the two. And the VAT rate still remains 7.5%. And now, VAT input, it's now recoverable. Like the government will be giving you, they'll give you your cash back. And that's why documentation is very key, more than before. You need to pay attention to the documentation in your business because that's the only way you'll be able to justify whatever claim, that you intend to, whatever claim you have about VAT, and to be able to get your money back. Documentation is key. Also, Now, essential goods are now classified as zero rated for VAT purpose. And I will explain what they used to be exempt. Now that they are zero rated, what does that mean? What that means is that before now, when a product or a service is VAT exempt, that means the input VATs paid, like the monies you pay to your vendor, right? In buying the raw materials, in buying, procuring all the goods and services you needed to produce the product or the service that you sell to your vendor, you cannot reclaim it. But now that it's not zero rated, you can reclaim it. What that means is that when you are selling to your customer, you still sell to them with no VAT. It's just like if you go and buy basic food items, you're not expected to pay VAT, right? You still sell to them without VAT. But if at the point of you procuring that food item, the vendor, you had to pay VAT to the vendor, now you can reclaim that VAT. In addition, let me add something at this point as well. VAT can be reclaimed even on services. Before now, VAT, you cannot reclaim the VAT paid, the input VAT on services. But if you have to, maybe you had to use a professional to ensure that you get maybe the desired quality of your product, the VAT charged by that professional can now be reclaimed back as well. The government will give you your money. So now for essential goods and services, they are now called zero rated, and they include food, basic food items, medical and pharmaceutical products, educational books and material, electricity generation and transmission, medical equipment and services, tuition fees, exports. Businesses can now recover input VAT on these zero-rated supplies, which was not allowed under the previous law, right? Now, okay, I can see that you have a lot of questions. I may not be able to, we have a lot of slides here, by the way. So I know that we may not be able to cover everything. We're fully aware, but it was important that we give you an idea of the full scope of the changes that has happened, in the tax landscape in Nigeria. So for certain sectors as well, they experience a lot of changes. So if your company or you work with a business that falls under this category, there are a lot of significant changes. We'll not be able to address them on today's during today's webinar, but it's important that you know that there are a lot of changes that affect the way you carry out your business, and you need to start paying attention to it because you can easily incur penalties, by 1st of January if you are not aware of this. There are significant changes for the oil and gas sector, power, mining, very significant changes. Energy company also, there are significant changes. Non-resident shipping and airline companies, there are significant changes. We'll not be going into them. We wrote a little here, but I will not be discussing that in detail. Now, I want to talk about the penalties, that the new penalties that exist for not doing, for hearing the tax laws, the penalties that exist. I want to talk about them. So first of all, okay, this is still for, as I said, this is still for the oil and gas company. By the way, also the update to the VAT sharing formula. Federal government has reduced their share from 15% to 10%. So states now receives 55% and local governments receives 35% of the total VAT revenue that is collected. That's how it is shared. So this is just us trying to explain what this law, because what the new law represents and what it's replacing. But so let's go to the joint tax board, but let's go to the penalty. As I said, I want to talk about this before I start taking your questions, because this is supposed to be an interactive webinar. Yes. So not registered for tax. If a person or an individual or a company is not registered for tax, 50,000 naira for the first month and 25,000 naira for every additional month of delay. So if you run a business name and never register, 6 months of delay, that means you have a penalty of 175,000 naira waiting for you already. Number two, if you are not filing your tax returns, and this applies to either a company or a business name, these penalties are the same, please. Then not filing tax returns, 100,000 naira for the first month and 50,000 naira for every subsequent month. Missing your annual return for 4 months, you have 250,000 naira penalty to pay already. Now, this is outside the tax that maybe you had to pay. The truth is that that tax also would now be subjected to penalty and interest. Yes, it's subjected to penalty and interest as well. Not keeping proper records to also show you that it's also an offense not to keep proper record. Individual business names, 10,000 naira, companies, 50,000 naira for not keeping proper records. Now, there's also a new penalty category. There's a 5 million naira penalty for awarding contracts to unregistered taxpayers. So if you're doing business with anyone, any vendor that is not registered for tax purpose, you have a 5 million naira penalty to pay. This is substantial. And I will advise that every company, every business right now, that you have a process for reviewing how you select your vendor. The lowest costs cannot be the only determining factor in selecting a vendor henceforth. You need to ascertain that your responsibility here is to ensure that taxpayer or that vendor rather has a TIN. So at the minimum, when you want to do business with people, either on their invoice, first ask them, do you have TIN? If they say yes, make sure you also verify. Because we've seen instances whereby people will give you TIN, but the TIN is not theirs. Yes, we've seen instances like that. So make sure you verify. If not, if you don't verify and the taxman comes and they ask you, so trust me, this is also one of the easy ways for the taxman, to rack up penalties. These are, I'm certain, these are one of the things that they will be checking because it's very easy to verify to know if you have complied or not. Then you have penalties for blocking the deployment of tax technology. Yes, government is beginning to develop some technologies that they want to deploy. If you don't allow them, then there's a penalty. Then penalties for inducing or interfering with tax officials. Then if you refuse access to FIRS technology, e-audits, 1 million naira for the first day, 10,000 naira for every additional day. If FIRS requests digital access and you ignore it, penalty starts immediately. Then not using the physicalization system, that also, it comes at a cost. 200,000, the penalties are significant. I think I like this one though. The failure to withhold or deduct tax, 40% of the amount not deducted. At the moment, when you are guilty of not withholding taxes when you're supposed to withhold, the penalty at the moment is actually 100%, then inclusive of interest and penalties. But at least this law has reduced it to 40%, which I think is better. It's definitely better. So when you also ignore notices from NIRS or summons, right? When you ignore, penalty the first day is 100,000, then 10,000 naira for every additional day. So if you ignore a summon for 7 days, that's 160,000 naira. Now, by the way, let me tell you, every time the taxman writes you, there's always the number of days that they must allow you before you respond or you show up. Now, depending on the letter, some it spans the duration. I mean, the number of days they need to give you is 7 days. Some it is 14, some it is 30. Now, depending on the kind of letters, right? So you need to also know all those things. If you don't, make sure that your tax consultant, because the tax law is actually a lot, but make sure that you mention this to your tax consultant. That's important. Then if you refuse to submit document or information, Then FIRS asks for your record and you don't comply, penalty 200,000 on the first day, 10,000 naira for each additional day. Then not disclosing required information on the legal arrangements, trust, corporate structure, beneficial ownership. Penalty is 1 million, then every other day is 10,000 naira. So just like that, see the penalties. The penalties are significant. So I'm going to stop my presentation at this point by talking about the tax board, your protector in the tax system. So the new tax law has created, will I say, a tax referee, an independent body that is to protect taxpayers from unfair treatments. A fully independent body created to handle taxpayers' complaints, established across all 6 geopolitical zones for easy access, then led by a tax board with at least 10 years of professional experience in tax law, accounting, auditing, or dispute resolution. I know that someone has been appointed. I think about 2 weeks ago, the appointment was announced, but ideally this office was created to protect taxpayers. So one of the things, I mean, a few things that they're expected to do is for them to review complaints about NIRS, customs, or any revenue agency, investigate tax issues raised by individuals or business, mediate between mediate disputes, mediate between disputes as well. Then stop arbitrary tax actions or unfair assessments. They need to enter in tax offices to verify your complaint, recommend corrections to tax authorities, institute legal action on your behalf. Yes. Educate taxpayers on their rights and obligation, act as a watchdog against harmful fiscal policies. Policies. The Ombudsman services are free. I think it's important you don't forget this, that it is free. So you don't expect that anybody in that office will say you should come and pay a dime. It's supposed to be free. However, there are some limitations, or will I say, there are some things that the tax board cannot do. They can't interpret laws, issue tax assessment, cancel your tax liability, handle matters already before court or tribunal, handle personal grievances from tax officials. They can't, they cannot do that. Just like there are some, my expectation is that as we make progress as a country, that the laws governing this body are being reviewed in a manner that really gives them the power to act and to be effective as a watchdog or as a protector to taxpayers. Because at the moment in the tax law, there are some things that may restrain them from really carrying out, those responsibilities that has been placed on them. So at this point, um I'm going to stop sharing and I'll be reading your questions. I know that we have a couple of questions already, so I'll just go to your questions. So now I'm done sharing. I hope you've learned one or two things in this presentation. Can I see the chat box? I hope you've learned something new. Yes. Oh, thank you very much. I have. So I'm looking at your questions at the moment. How can we categorize NGO companies, and is the new tax law applicable? So NGO companies are still NGO companies. Nothing has changed about NGO companies in terms of the fact that they are exempted from paying taxes. However, these are the part for the aspect that relates to NGOs has to do with the other things I spoke about for companies. Remember, I said that if you do business with an unregistered vendor, you are liable to a penalty of 5 million. That applies to NGOs as well. So NGOs must know things like this. That's very key. For the VAT aspect as well, NGO too must know what relates to, like their own responsibility as well. I know that NGOs, they are not even supposed to be charged VAT, based on because of the service or the product that they are providing, is for humanitarian purpose, they are not supposed to actually be vatable as well. They are not supposed to pay VAT. However, there is a way that, please give me a minute. So my point is that, so I'm back. So for NGOs, nothing has changed except that you have to pay attention to these other rules, other tax laws guiding how transactions are done. If NGOs don't pay attention to that, then they will have penalties to pay as well. Like now, for stamp duty, we didn't even talk about stamp duty as well. There's a stamp duty act that has to do with ensuring that document agreement are being stamped. So if NGOs also carry out, like, they have those kind of agreements, make sure that your document, your agreement is being stamped. If you don't get it stamped, then you still have penalties to pay. So my point is that every other law guiding transaction in a company applies to NGO, but NGOs do not pay company income tax. I think that should answer your question. Thank you. If you have any follow-up question, please drop it. Can we get the slides? Please, can you explain the VAT? I didn't understand that part. What are presumptive tax? Okay, so VAT is value added tax. You have output VAT, you have input VAT. Output VAT is the VAT that the customers pay to you. Input VAT is the VAT that you pay to your own vendors. So now what you're expected to remit to NIRS starting from next year is what we call the net VAT. And the net VAT is usually gotten by the output VAT minus the input VAT. That's how it's calculated. And it's just the net VAT that you're expected to remit. Not just that as well, you can now, if you now have excess VAT, so example now, maybe by the time you did your output VAT minus input VAT, your input VAT was more than your output VAT, you can now ask for a claim back. You can ask the government that I have an excess input VAT. Please give me my money and the government will give it to you. That's what that law is saying. The presumptive tax, yes, is basically mostly for individuals that do not have records, or self-employed people. They don't have records, you don't have anything. Then presumptive tax applies to you. The taxman can choose to tax you based on presumptive tax, which is they'll look at the information. Of course, they've seen your inflow and they'll say that on this inflow, this is the tax you have to pay. And at that point, you will be at their mercy. As a small business owner, which financial statement do I prepare to file my taxes, both for enterprise and limited company? I hope you know that they are different. Enterprise, limited. But basically, you're supposed to prepare an audited financial statement. So, and in an audited financial statement, you have 5 statements there. You have your statement of financial position, statement of profit or loss and comprehensive income, statement of cash flow, statement of changes in equity, and notes to the account. It's very good. It's wise that you engage a professional in achieving this. If not, you may do it in a way that will make you pay more tax. And that's what a lot of business owners also do not know. Yes, could you clarify on VAT and tax for service companies like travel and international educational companies? So for international, remember we said educational, you may want to, for me to be able to answer this question holistically, I will have some follow-up. I have some follow-up questions to understand. So, but for travels, basically, if you are dealing with a non-resident airline, you have some obligations to that non-resident airline. You have to pay attention to that. The international educational services, I need to ask you more questions to know whether your services are non-vatable or they are vatable for me to be able to answer this question accurately. So you may want to reach out to us after this webinar for us to give more clarification. What are the proper records to keep as a business enterprise and a company? The proper record, the receipts, the invoices, anytime you buy anything, always ask for invoice receipts. It's very important. Those are the things we are saying you should keep. Anytime you take a loan, make sure there is an agreement, even if it is one-page agreement that says I took a loan from you, even if it's from your friend or from your spouse, you took a loan. Let there be a one-page agreement that says I took a loan this day, nothing fancy per se, but let both parties sign. And if you do that, you have the right documentation for that transaction. So that's what we mean by proper records, basically. How does the fiscalization works for e-filing of VAT and oh, fantastic question. We didn't just have time. If not, we would have said this. I don't know if you read it in I think about 3 months ago, FRS actually issued guidelines regarding and requested that companies that are making above 5 billion in turnover that they need to plug into the e-filing system. So at the moment, I think what the government is doing is to take it step by step, right? And the essence of this e-filing platform is to create transparency to both parties, meaning the taxpayer and NIRS in terms of what VATs you can claim. So, I mean, transparency of the VAT that you've paid and the ones you've paid and the ones that you received also from your customer. By so doing, let me tell you the significance of this e-filing system. If you plug into that system, it actually will help your VAT reclaim to be easier and smoother in a manner that it cannot be disputed. Do you understand my point? And no tax person can say that, no, you are not entitled to this, because at the moment, on our own part, we have such issues at hand whereby we are unable to, we know that there's a VAT input to claim. We are fighting for it. But the taxman is saying, I cannot verify. And we're like, no, you can verify this. It will reduce the disagreements that normally exist between the taxpayer and the taxman. It brings transparency and accuracy as well, regarding your VAT. So that's very important. So I think I've answered that. What about salary earners that already pay payee? What is the tax? See, if you're a salary earner and that's your source of income, you're good to go. Your payee is enough. Your pay is sufficient. Trust me, you have no business. I mean, you have no problem per se. However, let me state this though. I don't know if they truly want to implement this, but I read in the tax law that even at the end of the year as an individual, because there's something called annual return, the employer will file annual return. By the way, every employer at the moment, you're expected to file annual return for your staff to the state's revenue service on or before 31st January 2026. So, in the law, actually, at the moment, as the way it stands, it's saying that every individual also is supposed to file a return, right? But as I said, I don't know whether they want to implement that, but I saw it in the law. How do we get the slides? Of course, we are sending the slides to all the participants. Thank you. You will get it. Is JTB thing different from FRS thing? Yes, it is. So JTP thing is for states. Is for state revenue service, please. And FRS is for FRS. So yes, there's a difference. So your JTP thing should be used for your personal income tax. Is for your personal income tax, regardless of whether you're employed or you are self-employed or you have a business name or enterprise. Yes, that's the TIN to use. So the company where I work has TIN and a particular percentage is taken from my salary. Do I still need to have my own SIN and still file? No, you don't have to, please. That's the TIN that you need. That one that your company has, request for it if you don't have it. You should actually have it. It's your property. So please request for it. Yes, it is yours. If if a nine if I work 9 to 5 and my company pays my tax, but then I run a personal advisory service where I build models and consult for small businesses, do I have to pay tax on that extra money I'm also making? And what is the portion? Yes, you have to pay tax, please. Yes, you have to pay tax. So that's why. So for you like this, you have your 9 to 5 that you do. They deduct your payee, but you see on this income that you earn at the end of the year, also you need to prepare a financial statement calculating what your profit is in that year. And you will also declare your other source of income, but you also take into consideration the payee that has been deducted by your company. So it's usually a comprehensive report that is showing all your different sources of income in that year. Then for the taxes that have been paid, either as payee or withholding that has been withheld from you, you take that into consideration. Then if there's a balance for you to pay, that's what you pay the taxman. And if there's no balance, then that means you don't have to pay any cash, but it's important that you file. Yeah. I think I've answered this other question. I thought we can file taxes ourselves in the new tax reform because auditors are not really cheap. How can we afford that? See, the tax law is complex, truth be told. I know that most people try to do it, especially small business owners. You think you can do it by yourself. It is more expensive to do it by yourself. You know why? Because you don't know the tax law in totality and you don't know how to file your taxes in a way that allows you to pay the minimum tax within legal context. You would not know that. So yes, you still need an auditor. You just need to find the one that you're able to afford. Basically, that's what you have to do. What are vatable items? Can any business add VAT to their product? Okay. For vatable items, there's a long list. I've told you the ones that are zero rated. Every other product is actually vatable most of the time. They are actually vatable. The moment you see the list of zero exempt or zero rated VAT supplies and exempt goods or exempt VAT supplies, every other one that is not on that list is actually chargeable to VAT. Okay, thank you so much, ma'am, for this wonderful presentation. I have a few questions to ask. I work as an employee. I'm also an entrepreneur and registered as a business. How do I navigate tax payment for each category? I think I've explained that question using I've explained that question. Someone asked a question like that. Please just refer to my response to that. What is in for individuals with multiple bank accounts? Do I get charged for every money that comes into my account? No, I've told you taxes are not paid on the inflow in your accounts. What the government expects that you do is to submit your return that aggregates all your income, all your global income, whether derived in Nigeria or abroad. It puts it together, and based on that, you calculate your taxes. I said the ones that have been withheld from you, you take that into consideration. If payee to have been paid, you take that into consideration. You do a calculation to see if there's a balance. It's important that you have a tax consultant for you to be able to do this properly. Is tax paid monthly, annually, or do I go about filing? So VAT is filed monthly. VAT is filed monthly, but the personal income tax or company income tax is paid annually, please. As a business owner registered as a business name, all I have seen is the disadvantage of it. Is there any advantage of business name as regards tax, especially when your turnover is below 800,000 annually? Do you mean to do you because if you are saying it is below, so that means you will not pay tax. Maybe you mean to say if your profit, remember also I've told you a business name, you are charged on your profit, not on your turnover. So please don't make this error. You are charged on your profit, not on your turnover. Yeah. So if it is above 800,000, yes, you have to pay tax. So let me just be frank with every one of you here. At the moment, the way the law is structured, it is better especially for small businesses. It is more advantageous for you to be registered as a limited company than a business name, because the limited liability company at the moment has a threshold of 100 million, meaning that if your turnover is not up to 100 million, you don't pay taxes. Do you get my point? The only responsibility you will have is to file. Now, for business name, if your profit is above 800,000, you will have to pay tax based on the personal income tax rates. Do you understand my point? So truth be told, it's more advantageous at the moment to function under the limited liability company. It is. Please, can you recommend on how to make proper documentation of annual turnover? See, It is, you make sales every year now. As you're making sales, keep record of it. That's how you know your turnover. Turnover is sales. Please, in case you don't know that. Turnover is sales. As you make sales every year, keep a record that says, today I sold it, tomorrow like, just keep a record of your sales, and that will help you determine the documentation. Can you elaborate on rent, leave, and other things considered before deciding how? So yes, in calculating your personal income tax, it's always there. So we take into consideration a lot of things. In fact, there are some other things that you can also claim to reduce your tax that was not included here. So like now, if you have your pension, if you contribute into a pension scheme, it can help you to reduce your tax liability. Yes, it can help you to reduce your tax liability. If you contribute to National Housing Fund, it can help you to reduce your tax liability. If you have insurance, health insurance, yes, it can help you. So it is what you're asking me for is a proper school, because the calculation is not straightforward. But I'm just telling you the many other things also that could help you in reducing your taxes. So which one does a business? Okay, I think I've answered that question. Excuse me, please. I think I've answered. Is there any changes for companies related and interacting with agri sector? Um, no specific changes to this sector except the other changes that relate to how you do business in terms of withholding, in terms of your kind of vendor. No, there are no specific changes. However, under the EDI, the Economic Development Incentives, there are incentives for such companies, especially if you are producing or manufacturing in Nigeria. So it's something that we could discuss further, basically. Yes, there are incentives for that. You could benefit from that. Which should a business name use to be protected? JTB. So a business name, that FRS thing, remember, I've told you, a business name pays their taxes to State Revenue Service. The JTBTIN is for state. Please, that's where you pay your personal income tax to. If you have an FIRST thing, it should only be for VAT purpose, especially if you carry out a business that is VATable. It should only be for VAT purpose. That's the essence of that FIRS thing. I think I've answered that. So regarding working with vendors, what if as an NGO, a vendor includes VAT on their invoice? Should the NGO still pay? So, So you know why I'm being careful? Because you see, for you to successfully defend this, it depends on who your tax consultant is. At the moment, FRS will tell you that you are supposed to pay VAT, like you are to pay VAT. Do you get what I'm trying to say? But for a tax consultant to understand the laws very well. Now, it also depends on the transactions. So I cannot give you a blanket response. I cannot give you an holistic response to your question. Yes, sometimes you have to. You have to pay VAT, and sometimes you are not supposed to pay VAT. However, if you are not paying that VAT, make sure you have a knowledgeable tax consultant to help you with this, because you could most likely have FIRS issues. So irrespective of not meeting the minimum turnover of tax, we are still VATable monthly. No, if you don't meet up the minimum turnover of tax, no, you are not VATable monthly, please. The minimum turnover for tax, you are not VATable, please. You are not VATable. All right. Thank you. Okay, thank you too. I heard you say we have to file on or before 31st March. Yes, you have to file on or before 31st March. Yes, that's actually what I said. You have to file on or before 31st March. That is very important for business names, enterprise, self-employed. Yes, you have to. So at the moment, what will I advise? Start speaking to your tax consultants, because they will tell you you have to bring your bank statement, whatever supporting document you have. A proper financial statement has to be prepared to determine what your profit is. And based on your profits, taxes would be paid. I hope that answers your question. I know we still have more questions, but I'm looking at time. So at this point, I think I would hand over. I know that some people are asking questions on the chat box. So I think we'll just take note of all your questions, please. Please clarify on e-audit and digital compliance. So, okay, yes. So the point is that for companies that use software, I'll just answer this one. For companies that use software, right? In carrying out their tax audits, the taxman, in carrying out their tax audit, please, I want to have some water. So in carrying out their tax audit, they can choose to use an e-audit software that they have as well. But what that means is that for them to be able to use that software, they will have to plug into your own software as well, into your own technology. So that's what that means. Yes. Then for digital compliance as well, especially if you've plugged into the e-tax system as well, you need to be compliant with that. I know we still have many questions. There are too many questions. So please, if you have, we'll take note of all these questions. We'll try and respond, but it's important you have our emails. Please send us an email, and as much as possible, we are definitely going to respond to you. Joy, I hand over the class to you so that we can have the other brief session. Thank you. So Joy, you are still muted, please. You're talking, but you're still muted. Unmute yourself.
Oh, so sorry. Sorry about that. I think I was muted. So at this point, I would like to invite Sonia, a member of the Lefort team, to take our vote of thanks. Thank you very much, Ma, for the section. It was very impactful, and thank you for taking time to answer the questions as well. We are very grateful for the knowledge shared. I'll just hand over to Sonia to take the vote of thanks.
Good afternoon to everyone. I want to say thank you for being part of today's webinar. I personally believe that asking the right questions is far more powerful than spreading any form of misinformation. And I'm glad that today's session has opened up meaningful discussions and giving you clarity on the new tax rules and what they mean for your business. So on behalf of Lefort, I want to express, despite how busy your schedules are. As we wrap up, I would like to share something important with you. Now, as part of this webinar, we prepared a tax minimization strategy document, which is a customized guide created to help your business reduce tax exposure and legally minimize your tax liability, helping your business stay compliant under the new rules. Now, to build this strategy document for your business or your company, we would be having a personal one-on-one consultation session with you, where we would be asking the right questions, getting to understand your processes, and help craft a strategy and a structure that fits your business perfectly. Now, this offer would also enable you access to a tax Bible and a consultation where you will get to clarify treatment of transaction that you are unsure of to avoid penalties. Now, we do this for our clients, and this is of today's webinar. We'll be offering this at 250,000. Now, done for Lefort's clients, and the time frame if you want to commit to this is from today to Tuesday. So if you see this as something you want to take advantage of so that your business does not exist in a survival mode ahead of the new tax year, a link has been dropped in the chat box. Please just click it and follow through, or you can decide to reach us via our email. Now, on the link you would be using, please, you can choose a date from the December calendar that will be made available to you. Now, let me emphasize that 250,000 is a token when compared to millions that businesses lose every year, not because they are careless, but because of ignorance, misinformation, or preventable penalties. Now, at Lefort, we offer services beyond tax to position your business for sustainable growth. This include accounting and financial reporting, automation of business processes, audit and assurance services. Now, why most businesses fail? Not because they lack potential, but because of a lack of right guidance, system, and compliance foundation. We do not want this to be your experience. So once again, we want to thank you for joining us today. We appreciate your engagement, your very delightful questions, and your commitment to building a stronger, more compliant, and more resilient businesses. Ahead of the Christmas, we want to wish you a happy Christmas holiday. We thank you and do enjoy the rest of the day, and we look forward to supporting your journey. Thank you very much.